Well, let's go on because we're all gold bugs here. But let me ask this question. There's two questions. How is the price of gold manipulated? How do they keep it lower? And the second question is, why do so many people hate gold? So let me toss it to Ryan. How is the price of gold manipulated?
Through the paper gold market, Robert. Essentially, the futures and options markets on gold. There's so much more gold traded through these paper contracts in the futures and options markets than there actually is physical gold traded in the U.S. And these trades on COMEX, if you open up a paper gold contract, supposedly you can take physical gold, let the contract mature, and then you can go ahead and take delivery of physical gold. Well, at any point in time, there's as many as 150 people who think they own that ounce of gold in the COMEX vault.
But doesn't it also affect the gold and silver ETFs?
Yeah. Well, no, it affects the marked price on a daily basis of gold.
Right, but a lot of times the ETFs don't have the gold, do they?
Well, they'll have statements in their prospectuses that will show that there's a chain of custody and everything else, but there's a lot of legalese. And the bottom line is, it's not the same as gold in your hand or gold in your vault or gold buried somewhere where you know where it is.
And the futures and options, when that contract comes due, they just take it in money, right? They're not asking for gold; they're just getting cash or money.
Exactly. And whether they're doing it at the urging or orders of the government, or whether they're just doing it to make a buck, the markets are set up and leveraged so much that these hedgers and speculators can move the price kind of at will. And they can force it down if they're short, and they can turn around and buy it and drop it back up. And these high-frequency traders, if a group has about 120 to 150 million to spend on a bet in gold, and some other markets as well that are of the right size, they can make about $1.5 billion in the span of 10 minutes. If they pick their spots, they do their algorithms correctly, and they drive the price down, turn around, go long, and drive it back up. It's amazing how these markets can be manipulated these days.
But that's any market, too.
That's any market as well. Right. But gold is the right size market. It's kind of a Goldilocks market for this kind of high frequency trading. And
gold is shallow. I mean, there's not much of it. Not like stocks and bonds, which are
right.
Deep. So anyway, so for those of you who watch price of gold going up and down, that oftentimes only has to do with manipulation. But when you look at the fundamentals, which is what Dana is doing, if the fundamentals are so bad, we have so much debt, Dana, why do people hate gold?
Well, people are not trained to buy gold in the United States. It's a negative investment for the big Wall Street houses that want to sell stocks or bonds or anything that will make them money, right? Which is why you wrote Rich Dad in the first place, Robert. People are just not educated in this country. Other countries they are, but not in the United States, which is why we call gold the barbaric relic, which it really isn't, but it's just an education more than anything.
I overheard Jim Rickers, but what he said was he was the last class of his business school where they actually taught gold. He says right after that, the teachers, the academics, came out and started singing like birds in a choir, saying gold is a barbaric relic. So there was this whole, according to Rickers at least, there was this whole academic case against gold.
There was, and what Jim says is that he's looking at the same numbers we're looking at, and he's saying that this next debt crisis, the dollar's credibility is essentially going to be trashed, and the only way out of it, the only way that the dollar can regain its role as the world's reserve currency is to back it to some extent with gold. And that even at a minimal backing of all the dollars out there that exist right now, even just a 20% backing of all those dollars by the U.S. gold holdings would equate to a $10,000 an ounce price of gold, more than 5 times, more than 6 times the level that it's at right now.
And that's what keeps all the gold bugs chomping at their bits.
Exactly.
And then there's Harry Dent, who says it's going to go to 400. And I hate to say this to Dana and to Brian, as a pure speculator or owner of gold, goes to 400. I'm happy because I'm going to buy even more of it. But it wipes out a lot of people, right?
It really does. And if it does happen, it will be because there's a liquidity event where people just have to sell their gold to meet margin calls, like what happened in 2008.
Right.
And it won't last long. But the key difference today from 2008 is that not many of these hedge funds and big money speculators even own gold. So they don't own it. They can't sell it.
So, I was listening to Jim Rogers, and he says he's waiting to go back to 800. What do you guys think?
I think we've already got a pretty hard bottom in gold at 1050 from December of 2015. With the gold price moving higher now, over 1370 into the low 1400s, anything under 1200, I think, is going to look cheap to people if we get back to that level. So there'll be a lot of buying at 1300. If we go under that, 1200. If we go under that, 1100. It's a long way to $800 from there, unless something incredibly unusual happens.
The whole economy would go to pieces if that happened.
And so Dana, for the novice, just give us what are the indicators we should be paying attention to coming up right now? What should we be looking at?
Well, the biggest factors that impact the gold price in the short term are the relative strength or weakness of the U.S. economy. So if we turn in a really strong GDP number, or if the hiring is good, like we had a good number this past week on jobs, that tends to put downward pressure on gold. And conversely, if we have weak GDP or a weaker dollar, so look at how strong or weak the U.S. economy is doing relative to other economies, because we're the leader. We have been and we still are. Look at interest rates, where they're going. Gold loves cheaper money, and right now the market is driving, I think, the Fed to react more than the Fed is reacting to what's happening globally, which is an economic slowdown. It's clearly happening around the world, and I've been saying to myself for a year or two, will we lift the rest of the world's economies up, or will they drag us down? Well, based on the numbers that we're seeing now, it feels like we're being pulled backwards by the rest of the world's economies. The wild card, of course, is the short-term tariffs on China, whether we lift those or not, come to a happy conclusion to that, or whether they drag on further.
Well, Dana, I mean, the whole point here is this. Okay, this is the point, because we're an international company. The point here is this: if you own dollars, gold is cheap. You have Zimbabwe dollars, gold's expensive. And so It's all relative to your money. And I think I was just in South Africa. I was just cracking up. Zimbabwe is so desperate for any kind of collateral, they're now accepting pigs and goats and sheep and cattle as collateral because their money is so worthless. Also, what happened in Zimbabwe last month, or 2 months ago now, is exactly as Rickards talks about in his book, The Road to Ruin. He talks about they shut the whole system down. They shut the stock market down, they shut the banks down, they shut the bond markets down, and everybody was without money. So the thing is, I hate to be a pessimist on all this, but all too often we look at the $10 or $20 move of a price, but we miss the big picture. So the price of gold depends upon which country you live in and what is the value of the money you trade in. So really, that's the lesson, and that's the big point of the Rich Dad Radio Show. We're an international company, but to all you Americans, right now in U.S. dollars, gold is cheap. Any final words there, Dana? And we're going to close it. Dana and Brian, final words.
I agree with what you said completely, Robert, but I think it's also important, the direction, and I think that all of the currencies, all the major currencies out there are going to be cheapened because the debt loads are so high. So gold is, and we're not telling people to sell everything and buy gold.
No.
It's just an important insurance policy that everyone should have, some of it out there. And, and I hope that people will come to our conference this fall and look at Gold Newsletter. And if they go to goldnewsletter.com/richdad, they can actually save a whole lot of money and even get Gold Newsletter at half price.
All right.
That's just for your listeners.
Oh, thank you for that.
And definitely do attend that conference, because years and years ago we were laughing about it. I was one of those guys standing there selling my gold mine and silver mine, and I wasn't at your conference, but other conferences. But it's such an interesting opposite of stock market conferences and tech conferences.
And I think the biggest thing about Brian and Dana is that you're educators. You want people to be educated about gold. And so you've got goldnewsletter.com, you've got Amerigold, AMERgold.com, wealth of information there, so check it out.
So final words there, Mr. Dana.
Well, Robert, you taught me that being an educator is what I really need to do.
Right.
Both of the experience that Brian and I have in the marketplace, that's really where we're really well placed to help.
We're the old guys. We remember when gold was illegal.
True. I think people should think of gold as an insurance policy for the rest of their money. If you have 5 to 10% of your assets in gold, you have a nice counterbalance against traditional paper assets, stocks and bonds. And the stock market's clearly looking a little toppy right now. Could go higher, who knows? But things change. And I think the risk-reward ratio is a little high in paper assets, and the reward ratio for gold is a little low right now. Is high for what could happen in the future.
Right.
So gold is really an insurance policy, and I'm guilty of what most Americans are guilty of, which is being so U.S.-centric and myopic. The fact that you have a worldview, Robert, and can help people understand what's really happening in the rest of the world paints a fuller picture of what's really going on in the world.
Well, I was just in Zimbabwe, and they had a hard time putting a goat into their safe. So I love the extremes, and it's such an interesting time, and I thank both of you gentlemen for being stalwarts who've seen the price of gold go from 35 all the way up now to about 1,400. But who's counting? Anyway, thank you to the both of you.
Thank you, Dana. Thank you, Brian.
Thank you.
And
thank you, Robert. Thank you, Kim.
Thank you. We come back. We're going to the most popular part of our program, which is Ask Robert. We'll be right back.